So those that want to have this, for those who want to have this to have a recap, so as I'm recording this, though we'll still put it on maybe on our social media platforms if it's too heavy for you to download or something. We'll put this on maybe on one of our pages so you can have access to the presentation. So I will stop here and give Mrs. Olubusola Olabinton the opportunity to start. And I'll say welcome everybody again once more. Welcome Sylvester, welcome Elizabeth, welcome Odunayo, welcome Michael, welcome Dimai. Please permit me, I hope I pronounced that right. I'm not too used to doing it yet. Sylvester, Doris, Alexandra, Antonia, Chigozim, and Ade. Thank you for joining. You can still send the links to your friends or colleagues or family members that would like to be here. So thank you all again. And thank you to our presenter for giving us this opportunity to listen to her. She's a very busy person, but she has been able to permit us to hear from her today. So I'll stop sharing so she can have the screen. Thank you, Ma. You're welcome again. You're welcome.
Good afternoon, everybody.
Good afternoon.
And I would like to say a very big thank you to Tosi and Titi for this opportunity to share tax with you. I see familiar names, people that I know. Thank you for coming. Thank you for the support. So for those who don't know me, my name is Olubusola Olabinton. You can call me Busola. I just like to call my name in full, but you can call me Busola. I'm a chartered professional accountant with the CPA Saskatchewan. I'm a fellow of the Institute of ICANN of Nigeria and also a fellow of the Association of Certified Chartered Accountants in the UK. I love tax. I think I sleep, eat, and drink tax. I love tax. Out of everything accountants do, I think I'm more at home with tax than any other thing. So I call myself the numbers woman, but I think I want to change it to the tax woman. Please, in case I'm not looking at you, let me know. I have 3 screens that I work with, and sometimes I just forget where I'm supposed to be looking at. So today we're going to be talking everything tax. The mandate that Tosin gave me was to focus on people who are doing business as a full-time thing, and people who are doing business alongside their 9-to-5 job. There are tax implications for both of them. I was made to understand that there are some newcomers amongst us. Whatever questions you have, I'm here to answer them. I didn't do any presentation for you because I believe you would learn from what we're going to be talking about. So I'm just going to share my screen and my slides now. Just give me one moment to get there.
Hi, Sylvester. I see you raising your hand. Do you have something you want to chip in quickly?
Okay, there's actually an expanded team because certain people I had to invite because I see reason and I finished school here. So I see reasons why some people that are still in school or that finished school with me need to participate in learning about how to file tax and get tax returns, especially, the huge school fees that we paid through the process of going to school and all that. So I think some of them I might not be able to identify them are actually here because while I shared, I think they shared to some others. So that's why I raised my hand.
Okay, thank you. Noted.
I believe I can go ahead. Can you all see my slide?
Yes, ma'am, we can.
Yes.
Okay. So, like I had said, my name is Olubusola Olabinto, and I own and manage my own accounting firm. It's called OO & Co. Professional Services, where we offer a wide variety of accounting services. So we do your bookkeeping, we help you prepare your financial statement, we'll file your personal taxes, your corporate taxes. For companies who outsource payroll, we do payroll. We also offer advisory services like tax planning, business plan, business strategies, and the whole 9 years. But like I said, today, we are going to be talking taxes. So small business taxes, how small businesses should file their taxes. Before I go into the presentation proper, there's some basic information that I would like for everybody to know. I know some of you have been in Canada for a while. Like the gentleman said, some people are students, some people are newcomers. Taxation in Canada is on a calendar year basis. So what that means is you file taxes of activities you have done from January to December. Taxes are filed on a prior year basis. So today is the official commencement of tax season. So you would hear things like taxes in 2024, but we're in 2025 because taxes are filed on a prior year basis. So 2024 taxes will be filed in 2025. And like I said, it is on a calendar year basis. So everything you have done from January to December, you report it on your tax return in 2025. That's number 2. Number 3 is the Canadian system of taxation is they tax your world income. World income. So take, for example, you live in Saskatchewan, but you have a rental property in Ontario. You're supposed to declare it when you're filing your taxes. You live in Saskatchewan, you have a rental property in the US, you have to let us know because you have to declare it for tax purposes. That's what I mean by you have to declare your world income, all income that you earned in the prior year from January to December, regardless of the location, regardless of the type of business. I'll give you a very good example of that. I have clients who do YouTube. They're YouTube presenters. They do things on Instagram, on X, and all of that. And after a certain volume or a certain activity, YouTube, Instagram begins to pay them. They pay them in US dollars. They have to include that in their tax return because in Canada, we tax your world income. In the US, taxation is based on residency. But in Canada, we tax your world income. What qualifies you for tax? Especially for people who work in maybe 2-3 provinces, or maybe they work in Alberta and they live in Saskatchewan. What will determine which province that your tax will be subject to will be where you reside on December 31st of the year. So we'll be talking 2024 taxes. So where was your place of residence December 31st, 2024? That will determine. The other thing that I also want you to know is that your taxes are paid to both the federal government and the provincial government. That is why it is important for us to know your principal place of residence as at December 31st, 2024. Were you a resident of Alberta, Ontario, or Saskatchewan? Because that will determine the tax rate that will be applied to your taxable income. Very, very important. Let me go ahead. So, like I said, my main focus will be businesses. I would also be talking about talking to first-time or newcomers to Canada. So, as we might know, there are different types of business structures. We have the sole proprietorship. The sole proprietorship is that person who is doing business in their name. When I say in their name, when they went to ISC, ISC is the corporate registry. They said, oh, I want to be a sole proprietor. I want to do the type of business structure that I want is such that me and my business were one and the same. The other type of business structure is you could register, you could incorporate as a limited liability company. The basic difference is in a limited liability company, you and your business are two separate legal entities. Your business is a legal entity, you are a legal entity. But for a sole proprietorship, you and your business are one and the same. Even if the name of your business is ABC Canada Limited, if you registered it as a sole proprietorship, you are still one and the same. It is important to get that distinction. So as a sole proprietorship, when you're filing your taxes, you file your taxes on your personal tax return. That one we call T1 General. Please, this is very, very important. So take, for example, because I hear people say, oh, I'm just doing something small in my garage. Oh, I'm just doing something small in my business. You are a sole proprietorship. Even if you don't register with the corporate registry, it is deemed that you are a sole proprietor. And the income and the expenses from that business must be included in your T1 return. Very, very important. I'm going to be emphasizing a lot of the things that we're seeing lately that CRA is doing. Let me quickly put this out there. CRA is powerful. They have power. The government has given them a lot of power. They are so powerful that they work side by side with the corporate registry. They work side by side with the banks. So you're doing a business, you think in your own eyes, in your own understanding, it is a small business. I'm just, $2 today, $5 today. To CRA, it is money. Money doesn't have color in the eyes of CRA. Money is money. So even if you say, oh, I didn't register it, I'll begin to file the taxes when I register it. Your registration does not stop you from filing your taxes. Because once you begin to make money, even if you're making losses, which is another topic entirely, once you're beginning to receive money from third party, you are deemed to be a sole proprietor. And the law expects you to file that business, that small business, alongside your T1 return. Very, very important. On the legal side, you are liable for all business debts and obligations. You can't say, oh, it's my business, so I'm not going to pay or I'm not involved. If you want to talk like that, then it is advisable for you to register it as a limited liability business instead of a sole proprietor. So the summary of what I'm saying is you need to understand your business structure. It is very, very important that you understand your business structure to know what to do. If you're a limited liability company, you don't file a T1 return, you file a T2 return. So that is very, very important. Like the lawyers will tell you, ignorance of the law is not an excuse. That you didn't know is not enough reason to run foul of the law. Some people do business as full-time. That's their 9 to 5. That's what they do. Some people do it as a side hustle. So they go to work in the morning, they come back, they come and cook jollof rice they're going to sell, they cook meat, they bake meat pie that they're going to sell. Business is business, side hustle or full-time. So if you're a full-time business person and you're a sole proprietor, you will still file a T1. If you are doing it as a side hustle, you will include it in your T1 return. But if you're a limited liability company, you will just file your personal taxes and also file your corporate taxes. The corporate tax is what I'm calling the T2 return. I hope that is clear. Does anybody have any questions so far?
It's going to be an interactive session, so feel free to ask your questions.
Okay, I have a question.
Yeah, go ahead.
I'm sorry about that. I muted the person that I wanted to ask. I'm sorry.
Oh, okay.
Are you
Okay.
unmute and ask? I'm sorry.
Yeah, I've unmuted. So I wanted to ask if I do cooking and sell, say, African fabrics as a side hustle, but it's not consistent. So do I still need to put that as income on my part during my file taxing?
Yes, please.
Okay. Okay.
Thank you
Even
for
though it's
that
at,
question.
so even
Thank
though
you for-
it's very, very little, I must put that.
yes, yes,
Okay.
yes. And thank you for that question. You have multiple business. You're selling fabric, you're cooking. When you're going to file your tax return, you're going to separate them. Your cooking is going to be different from your fabric selling, but you're going to report both businesses in your T1 return. I'm assuming you have a 9 to 5 job.
No, I do life insurance full time.
You do life insurance full time.
Yeah.
Yeah. So you file it along your life insurance business.
Okay. Okay. Thank you.
Any other questions before we go ahead?
So I have a question as regards that, because we have so many people that also say they are doing some side business and they say, oh, it's not traceable. Really, is it really traceable if it's not going straight into their bank account and just collecting money by cash?
It is traceable, and I'll tell you something. CRA has a department called Underground Economy. I don't know how it operates. I don't know how they run it, but that is the department that was set up to catch people who are doing cash business. One thing that I always tell people is Canada is a small place. It just has, when I say small, total population, including the Northern Territory, is just about 40 million. So CRA has the resources, they have the time to trace anybody they want to trace. So I always tell people, you know what? If you're not going to declare, don't do it. It's too risky. You don't need the stress. You don't need the embarrassment. So yes, you're collecting cash. Remember that the person who gave you cash can, because he or she is trying to reduce their taxable income, can declare it as an expense. It becomes traceable. So from a professional standpoint, if you make money, declare it. There are tax tips, there are tax strategies that you can use to reduce the amount of tax. And let me just quickly put this out there as well. If you're making money, you will pay tax. There's no dodging. There's tax avoidance that is legal. Tax evasion is a criminal offense. Once you're making money, you will pay tax. It's the way you handle that money you're making. Maybe that's not the right way to say it. It's the way you are able to put a tax planning strategy in place that will determine how much taxes you will be paying. That you won't pay at all. I don't know how you can do it. And that is the truth. You just have to plan to pay the money. Any other question?
Yes, there's a question on the chat.
Okay.
It's asked by Olu. How would a civil servant who has Airbnb, do Uber, do plumbing work as well, fill tax? How do you maximize tax filing?
We'll get there. I have a slide on that. I just wanted you to understand this basic business structure. Any other question? Okay.
Yes, there is one more question here.
Okay, go ahead.
What if I sell my furniture in my house to buy another set of furniture? Do I declare that as well?
No, because you're not in the business of selling furniture. But if you're in the business of selling furniture, you will declare it. So I needed to understand the definition of business. The definition of business is that activity that you do to make profit. You set out to make profit. You set out to earn an income. That is business. But you bought a sofa and you're like, okay, you know what? I made a mistake. I don't like it. You sell it, you go and buy another one. you have not done business, you have just survived. But if the next month you buy another furniture, you sell it, the next month you buy another, then you are doing business. Is that clear? Any other question?
Yes, I have a question for you. I was trying to find my tax return before for 2023, and then they were asking me like for 15,000 and then like a line 15,000 and a 10,100. I also want to ask, is it possible to file it like by myself? Because before I give it to people to help me file it.
I will say yes and no, depending on how complex your earning were in 2024. Somebody just said he did Uber, he did plumbing, he did all of that. For that kind of person, I would say give it to a professional. But if you're just a 9-to-5 person, you don't have anything, no credits, no anything. I think CRE actually has like voluntary people that file for them or that put you through how to file it if your returns are very simple. Did I answer your question?
Oh, yeah. Because I'm actually a student, so sometimes I take grants and I have like 2 jobs or so. So it's possible because but you said that there is a like CRA have voluntary people that teach you how to file it.
I don't have full information on that, but I think they do. I think being the magic word. I think.
Okay,
Can I
yeah.
ask a question, please?
Sorry, sir.
Can I ask a question, please?
Yes, go ahead, sir.
Okay, I work in Europe,
Okay.
and I earn in Europe, though my family is in Canada. So how do I know from what you said that it's global, so which means I have to file my tax even though I'm earning it outside Canada.
This
So
is similar to you.
so
What's in
how?
Europe? Yes, money in Europe.
Yeah.
What's outside Canada? This is a live session on tax.
Sorry, are you talking to me?
Sorry, can I
I'm
add
asking you a
something?
question.
Yes, I had another voice, so I got
No,
confused.
that lady was trying to encourage somebody to join. So I think
Oh,
I
okay.
detected that, so I muted her. So you
Okay.
have 2 people asking questions. Udoka asked the first question, if I'm correct. Then I think Shinwa Ajala wants to ask the next question. So let's still get that clarity first from Udoka.
Yes,
It was one that spoke,
Mr.
then Mr. Shinwa, I think, or Mrs., or let me just call your first names. Shinwa Ajala can come to ask his questions after Udoka. So Udoka, please repeat your question for clarity.
I had his question. He's the gentleman that works in Europe.
Okay.
Yes, please.
Okay.
Udwak is the name. Udwak.
I'm
Udwak.
sorry, Udwak. I'm very sorry.
Okay.
Yeah, apologies. Actually, my question is similar to his question. So I think joining it together would actually assist us instead of us going back and forth. That's why I quickly want to chip in my question. If I'm permitted, then it's fine.
Please go ahead.
Oh, okay, yeah. Like he said, I think we have similar situation. Yeah, I came into the country, I'm new, but I work in Europe and I'm still working. Yes, and actually, as we're talking, I'd already filed my 2024 tax in Europe while I'm unemployed here. So in this situation, and I learned I have to file my 2024 tax here in Canada again. So what can we do?
My first question, I'm going to behave like a typical Nigerian that I am. I'm going to answer the question with a question. So, we have 3 categories of residents in Canada. We have people who are full residents. And the definition of full residence is they were in Canada from January to December. We are not talking about 3 weeks vacation. They were actually here. Those are full residents. We have the deemed residents. Those are people who spent a little bit over 180 days. That's 6 months. Then we have the non-residents. They're Canadian citizen, but they did not reside here. Maybe work took them to Europe. The way we would handle your taxes will be different. But let me give you a general response to that. I was going to ask you, are you a deemed resident, a full resident, or a non-resident? Like I said at the beginning of the workshop, we tax your world income. So you have to declare that income you made in Europe. We won't tax you, and we would also tax you. Hear me well. You have filed your taxes in Europe. You have paid taxes in Europe. You will declare that to say, I made X income and I have paid X tax on that income. Okay? There are some countries that Canada has a tax treaty with. We would ask you, what country did you work in? Then we will check, does Canada have a tax treaty with that country? If Canada doesn't have a tax treaty, we will look at the amount of taxes you paid. We will compare it to say, what if you earned this income in Canada? How much taxes will you pay? So take, for example, your taxes, your total income last year was $10,000. At 15% tax, that's $1,500. And maybe you paid $1,200 in your European country. We might ask you to bring the 300 balance. But we won't tax you all over again, if you understand what I mean, because that will be double taxation. But you have to declare it. Did I answer the question? Mr. Uduak?
Yes,
Mr.
please.
Ajala?
Yes, please. Yes,
Yeah.
please.
Yeah.
But
So,
the area that I didn't get you perfectly is for example, I came into Canada in May last year, that is 2024, and I just spent 2 weeks, and then I've been there again this January, and I spent 3 weeks, a total of 5 weeks in all, and I may not get back there again till maybe around June. So, like in a space of 1 year, I've only spent like 5 weeks. So, can you buttress on that a little, please?
when you initially came, did you come to land?
Yes, I actually landed. Yes, as a permanent resident.
As a permanent resident?
Yeah, my family is there.
Your family is here?
Yes.
Okay. Where were you December 31st of 2024?
I was in Ireland, Republic of Ireland. That's where I am.
You might not need to file your taxes. You didn't do the required number of days. But I will advise you to file your taxes because you're new in Canada.
Okay.
Do you understand what I'm saying? You're new in
Yes.
Canada. I will advise you. But according to the law, you really don't have to file your taxes. Number one, you were not here December 31st. Number two, you spent less than 2 months in a whole year.
Yeah.
But your wife will need to file her taxes.
All right.
Yeah. So, sorry,
Thanks.
let me also put this out there. Please, for married people, and this is me, this is my personal professional advice, always file your taxes together. The husband shouldn't file on his own and the wife filing on her own. Always file your taxes together. And the reason being that we are able to move credits from one spouse to the other.
All right. Thank you. Noted.
Mr. Ajala, did I answer your question?
I think there is still some gray area to I wish you can attend to. So I think we have the same similar situation, just that he had spent just 5 weeks. And I think I came in October, I traveled back, and I came, but I was here December 31st. Yeah.
I will advise you to file your taxes. For the gentlemen who work in Europe, whatever the government of your working country gave you as evidence of tax filing, please keep it. Keep it very, very well.
All right.
Sometimes CRA would ask to see it. And they would ask you the exchange rate that you use, because we will file your taxes in Canadian dollars. So we will do the conversion.
Okay.
Please, very important that you keep.
It's on the pay slip.
If that's what you have. I don't know the country, but most countries, their tax authority will give you like a tax certificate, like a receipt certificate, to show that your employers actually remitted those taxes they deducted from your salary to them. There will be an evidence of that.
Well,
Okay, yes. Well, I
yeah,
have that once in a year. Yeah.
Yes. So they would ask
ITR
you
form.
that. Sorry?
We always have, I think there is this ITR we get from the HR.
Okay. Can I go ahead now?
Yes, please.
Before
Thank
you
you.
proceed, ma'am, there are some few questions at the chat here.
Okay.
Should I read after the presentation, or you want me to go ahead right now?
No, go ahead. Go ahead. Everybody is learning, I believe.
Okay. So, as an international student with a part-time job, how do I maximize tax?
You don't.
Okay.
That's the truth.
The second
Because
one,
really, what do you want to claim? The only thing that I would say to you is that your part-time job, you have to make sure that they're taking the amount of tax that they should take. If they take the amount of tax that they should take, you will be fine. Because really, what do you want to claim? You're a student. The only thing that you can claim as a student is your tuition credit. I don't know what university you go to, but if you go to University of Saskatchewan, in your pause, they will have uploaded your T2202, which shows the amount of tuition you paid. There's a credit for that. You don't get money. But you get a credit for that. And then if you have medical receipts, if you do tithes and offering in church, you do donations. Yeah, but other than that, those are the only ways you can maximize your tuition credit, donation, medical, if you are not reimbursed for the medical. If you are reimbursed for the medical, you cannot claim it.
So, Titi, please permit me before you go ahead with the next question, but I don't want her to go too far ahead before I ask this question based on those who are still working in other countries. So filing your taxes, you said is an advantage of filing your taxes. I've heard too when they say file your taxes, even if it's zero tax, because when you're going to do citizenship, if you are a permanent resident, it will count for you at the time of citizenship. So please, can you affirm if that's true as regards citizenship and filing taxes, that it is used to count the number of times you filed your taxes, then you can count back how long you've been or you are qualified to apply for citizenship. Does that relate, ma?
I'm not an immigration person. I think an immigration person will be in a better position to answer that question. But with my knowledge, when I did my citizenship, they didn't ask anything tax. But the reason why I encourage people to file their taxes is there are benefits, even if not for you, for your children. If you're married and you have children, for your spouse. You understand what I'm saying? There are just benefits. There are a lot of benefits in filing your taxes. You begin to have RRSP contribution room when you file your taxes. Without filing your taxes, you won't have a contribution room. And you might need it when you eventually come back to Canada, because those are part of the tax planning strategy. I even tell parents who have children who are maybe like 15, 16 that are working, let them file their taxes. They'll begin to have RRSP contribution room. As per the relationship between filing your taxes and immigration, I don't know. We would have to talk to an immigration consultant. But for the other benefits, they can get GST. You understand what I'm saying? They just benefit to filing your taxes.
Okay, thank you, ma'am. So Titi Layomi can continue with the questions. More
Okay.
questions are coming in the chat. If you don't want to unmute to make your statements very clear or questions clear, you can drop in the chat and Titi Layomi will assist to read it out. So Titi, please.
Okay. The second question here is by Alexandra. What will someone who doesn't have a job declare? Can the family, husband and wife, declare jointly?
So that's two questions in one. The first question, if you don't have an income, what do you declare? It would depend on, are you new in Canada? Let me say this to answer that question. So if you're new in Canada, take for example, you came September 2024 and you haven't gotten a job up till now. CRA expects you to tell us what you earned before you came to Canada. That's why I said taxation is January to December and it's your world income. We're not going to tax it, but we need to know. So you came September, maybe you were working somewhere in Croatia, Russia, Ukraine, wherever. You have to tell us how much you were earning. And then for September to December, you haven't gotten a job, it will be a nil return. If you have already been in Canada and you just haven't gotten a job over the years, you file a nil return. Then you ask the question about filing jointly with your husband. I had said that for me, my professional opinion, spouses should file their taxes together. For that woman or that man that doesn't work, the other spouse has a huge advantage because you're filing nil return for one, the other person is working. There are a lot of benefits that will go to that person that is working because the other spouse is not working. Any other question?
Yes, please. There's a similar question here. I think you've answered that. How do we file tax together as husband and wife?
How do you file tax together? You file together. You file together. If somebody is helping you, you both go and see the person and tell them what you have, and they file your taxes for you.
The other one, what of children above 18 years? Should they file together with us, the parents, together?
No. No. They can file together in and this is me. This is my personal professional opinion. Let that child start his or her life. Like I said, they will begin to have their RRSP contribution room. If they're students, they begin to get their tuition credit. If they do donation, they begin to get all of those. If they decide out of the goodness of their heart that they want to transfer to their parents, we can do that, but they don't necessarily have to file with their parents. Once they're 18 and they're working, they can file by themselves. Any other? Okay, go ahead.
Yes, we have a couple of questions.
Go ahead.
Okay. What of person that landed December 26, 2024 and has not worked or done any business in Canada till date? Do they need to file taxes for 2024?
Yes.
What are they to submit?
They will tell us the income they earned in the country they are coming from before they got here. We are not going to tax it. We just need to know. So they have to, because they were here December 31st, 2024. So they have to file their taxes. And like I said, there are benefits to You see, a lot of us have biases about taxes. Believe me, CRA is not as bad as they come out if you do what you're supposed to do. If you don't file your taxes, for those of you who have children that are less than 18, you don't get your child tax benefit. If you don't file your taxes, you don't get GST. If you don't file your taxes, when they decide to share carbon rebate, you won't get it. You understand? In 2022, I think, I can't remember, the provincial government of Saskatchewan decided to give everybody $500, non-taxable. If you didn't file your taxes, you didn't get that 500. So there are a lot of benefits when you file your taxes. Next question.
Okay, I think more questions are coming to the chat.
I haven't finished my presentation, but it's okay.
Okay, can I go ahead?
Go ahead.
Okay. Mrs. Oluwatosin, can you please admit someone? What's the tax implication for someone that bought a first home in the tax year? Is the down payment raised from FSSA, CFSA, etc. tax deductible?
Can you start that question again? Is it what? I missed that part.
Okay. What's the tax implication for someone that bought a first home in the tax year?
Okay.
Is the down payment raised from FHSA, CFSA, and so on tax deductible?
Okay, so when you buy your first home, you get a first home buyer credit on the federal level and on the provincial level. So let me backtrack. There's a difference between tax deductions and tax credit. Tax deductions reduce your taxable income. So take, for example, your taxable income is $10,000. If we say tax deduction, it will reduce that $10,000 by whatever the deduction is. A credit will reduce your tax liability. Let me explain that. So your income is $10,000. You have RRSP of $2,000. This is just a simplified calculation to explain what I'm saying. Instead of us to tax you on 10,000, we will tax you on 8,000. We've reduced your taxable income by 2,000, the RRSP contribution that you did. So 15% of 8,000 is about $1,000. The credit that you have will further reduce that $1,000 that you're supposed to pay to the government. Back to your question. You get a first-time home buyer credit, which will reduce your tax liability. Remember that your tax liability is the tax that you're supposed to pay. So that credit will reduce it, but it won't reduce your taxable income. Because you contributed to FS, First Savings Home, that account, it is a tax deduction. But I don't know if you withdrew it to do down payment. If you withdrew it to do down payment, not everything will count as a tax deduction for you, but you will get a credit for buying your home, your first home. TFSA is tax-free savings account. It is not a credit, it is not a deduction because it is tax-free. Once it is tax-free, then there's no deal. You didn't get, you didn't pay any tax, so why should we reimburse you for tax? RRSP is a tax deduction. TFSA has nothing to do with your tax return because it's a tax-free savings account. If you have been contributing to the FSHA, it is a tax deduction. The difference between the RRSP and the FSHA is your contribution for FSHA, we just look at January to December, but for RRSP, we look from March to February. I hope I did not confuse you. Is that clear?
I think that's a yes.
Okay.
we have 3 more questions here.
Okay.
What about in a situation where both the husband and wife are not working?
They file nil returns. And they are not doing business. They're not doing anything. They're just sleeping and waking. They'll file a nil return.
Can a university student claim laptop expense?
As what? As textbook?
Can a university student claim laptop
I'm
expense?
just making fun. No, you cannot.
Okay.
If you are a business person, you can claim it as a fixed asset, but you use it for your school. No, you cannot claim your laptop.
The last question here. I came in November 2024, left in January 2025, and came back with my family in February. How do we go about the tax? My wife and I don't have a job yet.
He came alone in November 2024.
Yes, and left in January 2020.
His wife didn't come with him in November.
Yes.
Then only him will file. And he was here December 31st, 2024. If he was here December 2024, then he will file by himself. And then next year, they will file jointly for 2025 because the wife wasn't here.
That will be all for the question and the chat.
Okay. Thank you. So I'm going to go ahead with my presentation now. Now we are looking at income and expenses tracking. The law in Canada is you must keep all records and receipts for 6 years. I always say 10 years because CRA can come at the end of year 6 and say they want to check something. So I always say 10 years. After 10 years, it's statute bar. There's nothing anybody can do. So please keep all your records and receipt. Let me quickly put it in here. I personally advise that you keep your records and receipts in a digital form. Reason being that some receipts clean off after a year, 2 years. It just becomes a blank piece of paper. CRA would not accept that, oh, it cleaned off. So keep it in a digital manner. Scan it, save it into your laptop. There are all sorts of apps and softwares now that can help you do that. So please invest in that. For people who are doing business, you can keep your records using 2 accounting methods. You can do cash, that is, you record as you receive. Take, for example, somebody who sells fabric. When she sells the fabric, she records the cash. When she goes to the market to buy the fabric, she records the expenses. You can also use the accrual method. Accrual method is, sorry, I'm going a bit into accounting, but I'll try and break it down. Accrual method is, okay, I've gone to the market to buy a lot of fabrics. But of course, you won't sell everything at once, but you will record it. And as you're selling, you're recording the income, the revenue that is coming. So you're not waiting till you receive your cash or till you pay cash. Maybe you've bought on credit, you sell on credit. So the minute you sell, even though you haven't collected the money, you do the recording. Okay? And there's, like I said, there are different software, different apps. Some are even free on the internet that you can use to track. You can use QuickBooks, Wave, FreshBook, Receipt Bank, and all of those things to help you. If you're not a numbers person or if you're busy, you're doing too many things, these softwares and these apps can help you. Business income reporting. Permit me to advise everybody, if you are going to do business, let's do it properly. Do it properly. Register. Because you see, you don't know what tomorrow holds. No matter how small that business is. And it's not expensive. You understand what I'm saying? Register. I always say, if you're starting a business, register as a sole proprietorship. As your business begins to grow, your expenses are getting bigger, your revenues, then you can incorporate. The advantage of registering a business is you're able to separate your personal expenses from your business expense. If you don't register a business, you will not be able to open a bank account in that business name. You will still have to operate it in your own name. And then you model up. So take, for example, somebody who is a caterer who makes jollof rice. How do you know the quantity of rice that you used for your business and the one you ate at home? You should be able to separate it in case there's an audit. So please, whatever business you're doing, register it. Start as a sole proprietor and then just begin to grow from there. There are some goods and services that you sell that attract GST. If you are going to play with CRA, please don't play with GST. They're very aggressive when it comes to GST. Not the GST that the government pays you on a quarterly basis, the GST that you collect from your customers when you sell goods or services to them. So allow me to explain GST to you. Like I said, there are some goods and services that you must charge GST. It is not left to your discretion. If you go to CRA website, there's a long list of goods and services that attract GST. Like I told you before, it is not enough to say, I didn't know. You must know. The beauty about this GST is if you are still doing 1,000, 2,000, 3,000, you don't need to charge your customers GST. But the minute you hit $30,000, you must begin to charge GST. The GST is not your money. I cannot overemphasize that. It is CRA's money. You are just a middleman between CRA and the end consumer. So CRA expects you to remit that GST to them. And that is where the business number comes in. Because once you register a business, the corporate registry will give you a business number. It is that business number that you would register, that CRA knows you by, and that's what you use to remit GST. Please, if you are playing with CRA with anything, don't play with CRA when it comes to GST. They are brutal, they are aggressive, they don't have compassion. They look at you like you stole their money. And in the technical sense of it, you did steal their money because it's not your money. So please, I cannot overemphasize GST for people who are doing business, full-time or hustling. GST is very important to CRA. Does anybody have any questions on GST?
I don't think there's question on GST, but I have a couple of questions here in the chat.
Okay.
Can you wait after the presentation?
No, just go ahead. Go ahead.
Okay. What if you come in July 2024, not working yet, but you are doing a small baking business and not registered yet, getting $20 here, $50 there, do I still file the tax for the unregistered baking business?
I think the person came late. I did say that even if you didn't register, in the eye of the law, you are a sole proprietor. In the eye of the law, you are a sole proprietor, and so you must file your taxes.
Okay. I hear the amount you will earn in Canada, you will have to pay the government, and you will not get any tax return. How can someone doing 2 jobs and overtime work maximize tax? I think they are related questions.
If I understand that question, I didn't quite understand the first part. The person is doing 2 jobs and has another part-time job and is asking how to maximize their tax liability. Did I get that right? Did I understand that?
Yes.
The way to maximize, if you have 2 jobs, This is what I tell my clients. If you're doing 2 jobs, my advice is don't tell job A that you're doing job B. Not because you want to be fraudulent. Once you tell the HR of one organization that you have another job, they will begin to help you calculate your taxes. And sometimes they they don't take out enough taxes. So during tax season, you now have to pay taxes. Just keep quiet. Let them take the taxes that they are supposed to take. If they have taken too much taxes, you will get a refund during tax season. Which brings me, let me use this question to explain the difference between a refund and a tax liability. I've had situations where people have said, oh, you don't know how to compute taxes. I didn't get a refund. A refund is not automatic. A refund is not a tax word. It is an English word, refund. It's like you buy something in Walmart and you return it. They give you back your money. So when CRA refunds you, you have paid too much tax. That's why you are getting a refund. If you have not paid enough taxes, they will collect from you. Refund is not magic. It's not because they like your face or your name is beautiful. It has nothing to do with anything. It just has to do with, okay, this man made $10,000. His tax is $1,500. He paid $1,800. We refund $300 to him. So if you're doing 2 jobs, don't tell either of them. Let them take the amount of taxes they're supposed to take from your pay. If both of them have taken too much, when you're filing your taxes, you get a refund. That's what I can say. To maximize your taxes, you would have to do tax strategies. You would have to invest in things like RRSP. You would have to make sure you keep your donation receipts. You will have to make sure you keep your medical receipt. If your children are into activities like football, things like that, you will have to keep the receipts of things you spend. Those are the ways that you can maximize the taxes you will pay because you get credits for those things. Did I answer your question?
I take that as a yes. Oh, she said yes.
Okay.
I've been in Canada studying since January 2024. Can I file tax for my tuition fee? And if yes, how can I go about it?
This workshop is not to teach you how to file your taxes. This workshop is to let you know what to do. So I can't tell you how to file your taxes. But yes, you can claim your tuition. If you file your taxes, you can use your tuition to get a tuition credit. I hope I answered your question.
Okay, we have questions coming. The 30,000, is it in sales or net profit?
Sales for GST, sales. In revenue, sales.
Does common enrollment for children qualify for childcare costs?
Does what?
Common enrollment.
No.
The last question here. I am in Canada as an international student, but I only earn in Naira. How do I handle this?
Please, can you repeat that? She's an international student.
I'm an international student in Canada, but I only earn in Naira. How do I handle this?
When you say you earn in Naira, are you doing a business in Nigeria, or is the allowance your parents are sending to you?
Mr. Adeyinka, you can unmute yourself. He said businesses in Nigeria.
Yes, you
Business
have
in
to declare
Nigeria.
it. Like I said, you declare your world income.
So that's all for now. So
Okay.
we can proceed with the presentation
Okay.
since we've gone
Sorry,
past
sorry
an
to
hour.
take you back. Sorry to take you back. A quick one here. You mentioned keeping receipts for 6 to 10 years. I want to find out what kind of receipt is it everyday receipts like you go
No,
to grocery, you buy things, and what kind of
no.
you're referring to, please?
No. So we just got to the place now. So like I said, this presentation, my understanding was I was talking to business people, but it's okay for everybody to be here. So when I say receipt, take for example, you're a student, your tuition. The university will have given you a tuition slip. It's called T2202. You have to keep it because you're going to claim a credit for that. You have to keep that type of receipt. Take, for example, you go to church, your tithes and your offering, your donation receipt, you have to keep it. Take, for example, you claim medical. Maybe you did eye test, dental. You have to keep such receipt because they can ask for it. For those who contribute to an RRSP, your investing organization will give you an RRSP slip. You have to keep it, including your T4s.
Thank you.
Is that clear?
Yes, thanks.
Okay. So these are business expenses that you can deduct. The common ones are advertising and promotion, business insurance, office supplies and expenses, professional fees, business travel, business use of home expenses. I'm going to elaborate on that. Vehicle expenses. For those people who are using their homes to do business, maybe their basement, their garage, one room, there are terms and conditions for you to claim home office expenses. It's not enough to say, oh, I bake meat pie in my house. And so because of that, I'm going to claim all my electricity, all my gas, all my water bill and everything like that. It doesn't work like that. The way it works is you have to be able to allocate your utility bills between your personal and your business, because you're not using the whole house for your business. You're still sleeping there. Your spouse is there. Your children are there. You receive visitors there. So it is only the portion that you're using for business that you can claim. Please, this is very, very important. That's the new thing CRA is checking now. Those are the new things that they are auditing. So please, you have to be very, very careful in this aspect. Allocating expenses between employment and business use. You must avoid conflicts. You understand? Sorry, I thought somebody was asking a question. And if you're a full-time business person, in addition to your home office expenses, if you're using your home, you can claim your health insurance. This is not as straightforward as this, but it's just for you to know the things that you can claim. Any questions on this?
No question, but there's a question in the chat.
Okay.
Michael Udobo, if I pronounced that right. His question says, for next tax season next year, what happens since I didn't keep the receipts and records for my unregistered small baking business? Can I start doing that now?
Yes.
Register as sole proprietor and forfeit all that has happened in my business since January this year till now.
I don't want to sound like a wicked person, but you might have to forfeit it. The reason why I say so is you can't prove it. The bad thing is that CRA doesn't take bank statement and credit card statement. They take only receipt. People are shouting, people are like, they should be able to take that. Maybe they will, but as at this morning, they don't take credit card statement, they don't take bank statement. So if you don't have receipt, if you claim it, you see, this thing is a 50-50 thing. They might not audit you, they might. But I always like to err on the side of caution. What if they will disallow it and ask you to pay money? So what I would suggest to you is try and look for them. Most times now, most stores now, they send you an email. So maybe search your email so that you can claim those things. But if you can't find it, I'm sorry, I would advise that you forfeit it because you can't prove it.
Okay, next question. I just want so you can finish your presentation. Angela Ila, I hope I pronounced that right. Please permit me. She says, Angela Ila says, what percentage can we use to claim, say, rent? I think that's what she asked. Say rent or electricity. For example, rent or electricity.
I have a slide that will address that. So
okay, so moving forward.
Yeah.
Olasumbo Ayola ask another question. Can I claim business expense against my employment income if I have made no income from my business?
Kelsey, I noticed you were chuckling.
Okay, come again.
No. I mean, how can you claim your business expense against your employment expense? Are they related? Are you on commission basis?
Do you want
I would like to
again?
talk with that person.
Okay. So can I read the next question?
Yeah, go ahead.
So Odunayo Fashola asked, can I claim life insurance as a business person?
That's a tricky one. Are you a sole proprietor or a corporation? If you're a sole proprietor, you can't. If you're a corporation, it would depend on who the key man insurance is. We can take that offline. It's not, you shouldn't be able to claim it. You're claiming a life insurance for yourself as a sole proprietor. CRA won't allow that.
So that's correct because I'm also independent.
Oh, okay.
It's not claimable, except maybe you have your business, and then for your business expense, for your staffs that you're doing health and dental for, you can claim that. But as a sole proprietor, no, not in that light. So another question is coming in. Olu asked, hello, Rita. Okay, that's a direct message. So you can go ahead, ma'am.
Okay. Home office deduction. That's why I said that person should hold on. So these are CRA's rules and regulations for you to claim your home office deduction. You must have a designated place in your home for business that you are using regularly and exclusively for business. It must be your principal place of business. You must, if it's a service, even if it's you're selling product, you must be able to meet with your customers or your client regularly in that space. Very important. And these are the expenses that you can deduct. You have to determine the percentage of your home use for businesses. Let me go to the third column. CRA, when they have time, they have a lot of time. They will expect you to be able to show them a floor plan showing home office in relation to total space. They will tell you to go to the city of your residence and get a plan of your house and then show them which area of your house you are using for business. Photos of your workspace, log of business use. So what I'll tell you what I advise my clients to do. If you live in a 3-bedroom house and you have one room that you are using for your business, take, for example, you bake meat pie. So you're using your kitchen. I will tell you your kitchen is 1 room, your living room is 1 room, your 3 bedrooms are 3 rooms. So you can claim 1/5 of all your expenses. If it's not that straightforward, a lot of us, when we're buying our houses, when we're renting an apartment, they will tell you the square meter. You should be able to say, oh, out of this 1,200 square meter, 300 I'm using. So you will claim 3/12 of your home office expenses. So for that lady who asked about the rent, what is the space you're using for your small baking, like you said? You have to determine that. And then you will apply that percentage to your rent, to your property tax, to your utilities, to your insurance. The law allows you to claim your mortgage interest, not principal, only mortgage interest. You cannot claim principal. Please note that. Very, very important. I hope I answered your question, the lady who asked about portion of rent.
So for time's sake, we'll just allow you finish your presentation. And she has said yes too.
Okay.
If you have any more questions, just put it on the chat so our presenter can finish her slide. She's almost done though.
Yeah.
Thank you.
Yeah. So income tax implication, like I said before, we have the federal, both the federal and the provincial taxes you. But you see, you don't have to go to downtown to go and pay or go to Ottawa. CRA has a way of apportioning it. It's just to let you know. Because some people are like, oh my God, this tax is a lot. You're paying to 2 different governments. Okay? For people who are doing side hustle, you know, they have their regular 9-to-5 job. Your business income is added to your employment income. And of course, this will push you into a higher tax bracket. That is why it's important that you keep adequate record so that you can deduct all your business expenses. But please ensure that they are business expenses. Very, very important. For full-time, people who are doing business for full-time, it might be you're not adding to any employment income because that's all you're doing anyway. But the same thing that I told the side hustle business is what I would tell you. You need to keep adequate record of even the sales that you're collecting and the expenses. Very, very important. For taxes now, for your tax liability, CRA started, it has always been a law, but they started enforcing it since 2023. If the tax you're paying is more than $3,000, they expect you to pay your tax in installment. So what it means is this will probably be applicable to full-time business people. For people who do 9-to-5 job, your organizations are already remitting your tax to CRA, so you don't need to bother yourself. Or if you're doing a side hustle business and you're making good money, if your tax liability is above 3,000, CRA expects you to make instrumental payment, and they have specific dates. So it's March 15, June 15, September 15, and December 15. Very, very important. Most likely they would send you a letter to this effect. But if they don't, you have to know. Like I always say, ignorance of the law is not an excuse. CPP contribution. Everybody is supposed to contribute to CPP, regardless of if you're a side hustler or a full-time person. Everybody contributes to CPP because when you decide to retire, this is what they would pay you back. For people who are employed, you don't have a problem. Your employers are already contributing on your behalf. CPP is a contribution between the employer and the employee. So if you're employed, you're already contributing and your employer is already contributing. If you're self-employed, you'll be paying both portions. which is 11.9% for 2025. For side hustle, you don't really need to bother yourself because you already have a 9 to 5 job and your employer is already contributing. For full-time business people, you have to contribute. You are responsible for the entire contribution. So that you won't, I always advise people, depending on your cash flow, if you have, I don't think anybody ever has excess money. That's the truth. But if you can squeeze out of that tight money and just be putting something towards your CPP so that it's not mind-boggling during tax season. They prepare your tax and they say, oh, you have a tax liability of 4,000. For me, I don't like such things. So you can do it in piecemeal. Most banks, I know RBC has that feature. TD Bank has that feature. I'm not sure about Scotiabank and CIBC. You can actually pay your tax in installment and, just keep putting it there so that during tax season, you're not overwhelmed with the amount of money you have to pay. Now, let me just quickly mention tax saving strategies. You can do income splitting opportunities, but please, you have to be very careful when you are doing income splitting opportunities because of TOSI. Back in the days, maybe like 5-6 years ago, it was so easy. I could employ my 13-year-old and say I'm paying him, and then I can deduct that salary. But now CRA is checking. If you have put your child in your business and you're paying, you have to be able to log the hours that child is doing in your business. And CRA says they must do a minimum of 20 hours in a month before you can pay them or before you can claim their salary or their wage as an expense. Please, it's very, very important. We fought tooth and nail with CRA. This was a while back, but they won. They are powerful people. Okay. Another income splitting opportunity is to contribute to your RRSP, to your spouse RRSP. I believe this is Tosin's area. She'll be able to educate you more on the spousal RRSP contribution. It has its pros and its cons, but it's a good tax strategy. You just have to understand the rules that govern it. Timing strategies for people who do seasonal business, like the people who bake cake. I know a lot of people will order cake in December. And so business is booming. You're collecting money. It's nice, it's good, it's beautiful. During tax season, you will be angry. So what you can do is to sit down and say, okay, I have sold X amount of cake. This is the amount. Maybe you invoice some people in January. You invoice some people in December. So, you have timed it in such a way that a lot of money is not coming in at the same time and you don't have to pay so much taxes. You have moved it to the next year. This is tax avoidance. It's not tax evasion. Okay? And then you can accelerate your expenses against that revenue to say, oh, all my expenses, I'm claiming it this year. Remember, you're a seasonal person. So the same thing will happen December of the next year. Like I told you, RRSP contribution is a deduction. It reduces your taxable income. Tosin will highlight more. As beautiful as RRSP contributions are a deduction, they wait for you in the future. If you collect RRSP contribution before you are 65, Tosin, I stand to be corrected, you will pay tax on it. They will add it to your income. So you need to know how to manage it for it to be a good tax saving strategies. If you are one of those people that invest in shares, in mutual funds, and in the like of that, if you have investment, you can consider selling the underperforming ones. If it's not doing well, yank it off. It will help to reduce your tax liability. Any questions so far?
No, not yet, but we can move ahead so we can round up.
Okay. So there are some things that trigger audit. I don't think I remember to put it here. One thing that triggers audit That one is given. Moving expenses. Take, for example, you moved from Calgary to Saskatoon. The law allows you to claim moving expenses, but they will audit you. They will ask for everything under the sun. Another thing that flags off audit is when you claim 100% of your vehicle or your home expenses. That one, they will come and check. They don't joke with it. They also look at industry. If your expenses are higher than the normal industry norms, they will come and audit you. Then you're making losses every year, maybe for like 5, 6 years. They were wondering why you're still in business. They will come and audit you. Then large round number of expenses. They just see maybe advertising and promotion, $10,000. What are you advertising? Meanwhile, your sales revenue is 30,000. So you have taken a third of your sales revenue to advertise. They will come and audit you. If there's a mismatch between your lifestyle and your reported income, you remember that I did mention underground economy. That's the job these ones do. You're like, okay, you're making losses, but you're driving this type of car. You live in this type of neighborhood. It will trigger an audit. So best practice, keep all receipts and invoice. Maintain a log for vehicle and home office use. People will go to Disneyland and call it business expenses. They will audit you. They will ask you what kind of business you went to do in Disneyland, or you went to do in Niagara Falls. They will ask you. Or you went to Calgary during Stampede. They will ask you. They will ask for your bank statement. As much as they will ask for your bank statement, they don't normally take it. Although we are fighting for that, they don't normally take it as evidence. They like to see the receipt. Year-end checklist. You have to make necessary purchases for business use before December 31st. So I did it in 2 columns. We have the December 31st column. So make necessary purchases so that you can claim all your expenses. Pay outstanding business bills. For those who do large businesses, document your inventory on hand. Review your profitability. Make charitable donations because there's charity credit. For January, February, you use that time to organize your receipts, reconcile your account, gather your T-slips. March, April is tax season. For business people, your tax season, you have up to June 15th to file your taxes. If you are owing, you are to pay by April 30th. If you are owing, if after you pay by April 30th, you have up to June 15th to file your taxes. To everybody, that doesn't add up. How will I know if I'm owing if I don't do my tax computation? I might as well file. So April 30th is very key. If you are owing, you have to pay. Let me quickly say something. If you are owing taxes, please, 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 please pay. The interest rate CRA is charging now is unbelievable. They're charging as high as 10%. As high as 10%. Then apart from the interest, you pay a penalty again. And the interest is compounding. So please make room, make provision, pay whatever you're owing CRA. They're not playing with anybody anymore. They're not kind. Everybody is looking for money, including CRA. So with these few points of mine, I hope I've been able to communicate.
Thank you, thank you, thank you, Ma. I know this session was a long one because we started asking questions while the presentation was going on, and I'm not sure if any questions are still in minds of participants here to ask. I appreciate the private messages as an more or less like, oh, I have my opinions. I appreciate you all that privately messaged me. I still see questions coming from one person. If you still have questions and you don't want to unmute your mic, please just quickly type it because we're rounding up soon. We've spent over 1 hour already, and I appreciate you all for your patience again. So this recording will be on some of our YouTube channels because I know that some of our, it's very easy to watch it on your TV. and we'll try to edit it and put it there in summary. So going forward to the question, Chinaza, Mojeku, I hope I pronounced that right. She says, I got a second job and they said that if I had another job, I should not file the new tax form that I was given, that I should file zero tax in the columns and then feel that I have another job at the column of the page, saying that if I don't feel that I have other jobs, I hope I'm reading this properly, saying that if I don't feel that I have another jobs, that the first job will tax me and the second job will not tax me too. Is that a question? Tax me too? I don't know if that's clear enough.
I think I understand what she's trying to say. And I had mentioned that in the course of my, somebody had asked a similar question. Chinaza, my own personal advice to you is don't answer them. And the reason being that, yes, you have job A, you have job B. Remember that they're going to be paying you. Let them tax you. I know that the reason why you got that second job is to make ends meet. So if they're taxing you, they're removing out of that end that is trying to meet. The good news is if job A taxes you, job B taxes you, most likely you have been overtaxed. During tax season, you get a refund. The reason why I say let them tax you is, what if they don't tax you enough because they believe job A has taxed you? Then during tax season, you will have to pay tax. Because sometimes we're humans, we make mistake. What if job A, like, oh, okay, they can make a mistake, they don't tax you enough, oh, she's already getting tax from the other job. You understand what I'm saying? So let them both tax you. It's a savings. It's a savings. And during tax season, if they have both overtaxed you, you get a refund. You're happy. Chinaza, did I answer your question?
She gave a thumbs up that yes, you did answer her question. So going forward to the next question, Jane Ogu says, thanks so much. This is a beautiful session. Chinasa still says, this is a beautiful and impactful session. So if you still want to have a recap for the future, and maybe now, we can tell. Like I said, we're going to put it on the YouTube channel and you can just sit back and maybe enlighten one of your friends or members who are concerned about filing taxes. And now, Zimeya, I hope I pronounced that right. Zamaye says, thank you for this session. Okay, what else? Jen Ogui says, how can I get your contact for tax filing? I would paste her email here. She prefers to be contacted by email. That's Mrs. Olubusola Olabinton. Except she says otherwise now since she's here.
No. My email is right on my presentation.
Okay, that's awesome. So you can reach her. She would get back to you. I think she's very prompt. What else? Tolu Yemi Adeyemo also says, as an independent contractor to government, personal vehicle is used for the job and government reimburse you for mileage. I'm not clear about that, but I'll read it again. As an independent contractor to government, personal vehicle is used for the job and government reimburse you for mileage. Do I need to include the gas expense in my tax filing? That's a question.
What is the arrangement you have with your employers? You see, for people who use their motor vehicle, their home, because some people work from home, some people are remote workers. Before, just shortly after the pandemic, once you tell us you work from home, we claim all those expenses for you. But with effect from, I think it was 2023, CRA says it has to be an agreement between you and your employer. Your employer will say you can claim this, you can claim that, you can claim this, you can claim that. Some employers will give you a T2202. I can't remember the number now, forgive me. So my answer to your question is, it would depend on your agreement with your employer. That can I claim my gas? Can I claim my repairs and my maintenance? Can I claim my registration? If they say yes, then you have to keep a log to say, okay, I drove X kilometers for business, for work. I did X kilometers for personal. And then you have to tell us the total number of kilometers you drove in the year. So take, for example, you did 20,000 kilometers. You should be able to tell us that 5,000 out of that 20,000 was for work. And that is the basis in which we will use to claim those other expenses. But like I said, it has to be something you had discussed, you had agreed with your employer.
Okay.
Did I answer your question?
I think so. She can give a thumbs up if yes. If not, she can ask more. So going forward, Chinaza Ojeko says, thanks so much. Odunayo Fashola says, thank you for this presentation. I learned a lot. Tessa Agbato says, thank you for this great session. It was very insightful. And Udwak Ekpeyong, I hope I got that right, so Ekpeyong says, will you kindly send the link to the presentation to our emails, please? We could work on that once it's edited to make it a bit short. And the emails of this presenter, please, okay, we'll work on that too, since we have your contact. I've put on the chat to where you could follow us on our channels so it can be easy for you to have access even while you're in your car or something. It's easy to use YouTube. So I learned that, so you can use the opportunity to follow up. Then here, what else? Currency says thank you. I think we're rounding up the session now, so questions have been asked earlier. So would want to say thank you to you all, to recognize Tulu Yemi Adeyemo. Thank you very much, she says, or he says. Alexandra also says thank you so much for the educative session. Thank you all for your patience. I'm just reading what's in the chat so we can round up. And thank you for following us on Facebook. Michael Udabo says, must sole proprietorship be registered as your first last name, or must it be in your business name in order to file taxes? This might be the last question we'll be taking now, and we'll round up now because we've taken so long.
The choice is yours, really. The choice is yours. You can, I'm sure you've had people say ABC Canada Limited trading under the name. So the choice is yours, really. But the funny thing is, if you go to the bank, they recognize your name, not your business name. I hope you understand that. They recognize your name, but that's for the banking. But for you, the choice is yours. I'm a sole proprietorship, but everybody knows me as OO & Co Professional Services. That's my business name. I hope I answered the question.
Go and bring my laptop. Let me plug this thing.
I think you did. So I would like her to stop sharing. I would we'll be rounding up now because we've taken too long. So I would share the email if you're still going to be here waiting. You'd see our email, though it will be shown on our page, because when we started, I shared my screen earlier and you could see her email. I don't know if you can all see this, but we're rounding up the session because we've taken so long. I appreciate you all again, and I would share an email in the chat while we are still waiting here, but this has been a long one, and I appreciate everyone for their patience. Thank you so much. Thank you, Ms. Olubusola Olabinton, for this presentation today. You made it, you really hit the nerve, made things very clear to so many people, despite the fact that it was a short presentation you had, but the questions kept coming and you were very receptive to answer. So thank you very much, Ma. Thank you for my co-host, that's Titilayomi Aboluwoye. And I thank you. I also thank my advisors who are also here. Tessie Agbato, I recognize you. Some of my advisors had already joined earlier, and then they had to join another meeting, but this is what we do to bring awareness to our community. It's tax season, and that's why we are doing this today, but we actually still help more clients to understand how they can increase their wealth, manage their health, and maximize tax advantages and in their businesses, or as if they want to start up something as regards a side business while they're still trying to work on their 9 to 5 or 9 to 5. So feel free to connect with us. I'll still paste in the chat her email as requested while you're still here. I'll grab her email now so you can email her to use her services too. Thank you so much. Thank you everyone again.